with you. So you've got raising guidance, beating earnings estimates, reporting the 21st consecutive quarter of comparable sales gains in the U.S. Is this more of a reflection of what's going on with the strength of the U.S. consumer, or is this more about the strategic initiatives that Walmart has in place?
This is a combination of both. The U.S. consumer is in a good spot. Wages are growing. The balance sheets are relatively healthy. But Walmart is gaining market share, and a lot of its initiatives are paying off. They're seeing growth both in-store and online. Their gross margin in the U.S. is starting to stabilize. They're levering expenses in the U.S., so it's all good. But a lot of that is priced in, and if we were to frame that out, this year Walmart's going to earn, call it $5. If they were to grow that around 5% each year for the next few years, which would be a big number given the size and scale of that business, that means over the next 4 years they might be able to grow $5 to $6. And if the stock were to trade at 20 times that, which would be a premium to where it's traded at on average over the last 3 years, it would mean a $120 stock. Well, it's at $123, $124 right now. So a lot of the success and a lot of the momentum that Walmart's experiencing has not gone unrecognized by the market.
So you believe that the upside for Walmart stock is already priced in. That's what you said in your November 8th note. Your price target of $115 is about 8% below where the stock is trading today. So do you believe that this is a top, or do you think that over the long run they will be able to, the market will appreciate some of these initiatives that may take some time to come to fruition?
I think the key for Walmart is that it can sustain the momentum from here. And if that's the case, then perhaps it can grow with earnings growth over time. A lot of the growth right now is coming from the rollout of online grocery pickup. That's accounting for a quarter to a third of growth in the U.S. business. As they fully penetrate that, the rollout of that, it may be a little harder to sustain the 3% plus comp growth that they've been achieving recently. And so that's a critical question for the stock from here.
Now, Robby, as Michael mentioned, unlike Walmart's retail peers, it has grocery, it's invested heavily in e-commerce. But at what point do you think investors expect better margins from those initiatives?
Well, there's a huge focus on margins at Walmart, but importantly, the margins are improving. The e-commerce margins are improving. They called that out for this quarter. Also, Walmart's U.S. business EBIT growth continues. They're leveraging expenses. So the profitability for Walmart U.S. continues to improve despite all these investments they're making in e-commerce, and also all the investments all the price investments that they're making. And you're seeing that play out with very strong same-store sales. So the same-store sales were up 3.2% this quarter. What really surprised me was how strong the transaction same-store sales were, up 1.3%. A lot of brick-and-mortar retailers in the U.S. are struggling to generate positive traffic at all, and Walmart is showing that their e-commerce strategy is not only supporting their e-commerce business, but also their store traffic.
Robby, the market obviously has kind of awarded Walmart with a lot of credit for the things you're talking about, and given the valuation. Where is that traffic growth coming from, as far as you can tell? In other words, is Walmart truly stealing market share, either from other kind of mega store players or elsewhere, or is it just that they're kind of growing in line with nominal GDP and there's enough to go around?
Well, they're clearly gaining some market share if you just look at the overall numbers, and I think some of that is coming from a lot of the store closures you've seen. So certainly Toys R Us going away created a market share opportunity in the toy business. They're gaining market share in grocery, given how fast they're growing their grocery business right now in the U.S. When you think about valuation, Walmart's free cash generation remains very strong. So while on a PE basis it could look stretched by historical standards, we calculate free cash flow yield is approaching 3 to 4% as we speak right now. So it's not an overvalued stock when you look at it on a free cash flow basis. Now, as you go further down the line and they start to benefit from some of the alternative profit streams that come with success in e-commerce, like digital advertising, you could see new EBIT drivers come into play that make the company a lot more profitable in the future than the market currently expects.
And yet, on the top line, they did miss estimates. Michael, what do you think the street was overestimating in the quarter?
A lot of it was currency and international markets. They're seeing some softness in areas like the UK, Chile, and so there's probably not a lot to read into. The main economic engine for the business remains the U.S., and they're doing well in areas like online grocery pickup, which they're really defining a new frontier for competition in that area, and they're probably taking share within the grocery space because their grocery category comped up mid-single digits. Others are seeing closer to 2 to 3% growth within that category. Still, that a lot of that good news is really priced into the stock at this point.
Robby, we've gone from a point where people thought Walmart would be among the victims of potential new round of tariffs to where everyone has essentially said they can handle it, they can absorb it. The president tweeting in that regard just this morning. Is that actually the case that, in fact, Walmart, even if we get an escalated round of tariffs, can handle that? It's not going to be visible in the numbers?
It's a great question. I actually was in Asia Pacific last month meeting with a few of Walmart's suppliers, particularly on categories like apparel. And, the message I got was Walmart is much better positioned to mitigate than most retailers in the U.S. The other thing that, I think you've heard Walmart talk about and that we believe is if you were to see a sustained tariff situation that caused higher inflation than the U.S., we would expect Walmart to maintain their very aggressive low price positioning, and it could accelerate market share gains for Walmart. So very positioned from a mitigation standpoint, also positioned well if the trade war were to escalate rather than to de-escalate.